Hello and welcome back to Lesson 6 of the Masuda Ashi introductory course. Today we'll continue looking at basic Masuda Ashi chart patterns. This will be the second of 3 lessons in this series. And first of all, to follow on from the previous lesson, lesson 5, we covered 2 main points regarding Masuda Ashi short-term and medium-term real body lines. Now, if you remember, we looked here at the medium-term Masuda Ashi line and also the short-term Masuda Ashi line, which is the more zigzagged, jagged edged line here, which fluctuates more frequently. In terms of the daily Masuda Ashi chart, this short-term line represents the 3-day Masuda Ashi real body line, and the medium-term line represents the 25-day Masuda Ashi real body line. And we said the medium-term line, or the 25-day line, is important as an indicator of whether we are in an uptrend or a downtrend. As you can see on the right-hand side, we have a pink medium-term line for the whole stretch until this point where it changes color. This indicates we're in an uptrend for this period, whereas we are in a downtrend on the left-hand side where the medium-term Masuda Ashi line is blue. This was one of the key points that we covered in the previous lesson. The other key point being that in a downtrend, usually the short-term Masuda Ashi real body line, in this case the 3-day line, will traverse below the medium-term line, as you can see here. And conversely, when in an uptrend, the medium-term line here is pink and the short-term Masuda Ashi line will trend above the medium-term line in an uptrend. Another point we covered was the importance of golden crosses. Now, a golden cross is where a short-term Masuda Ashi real body line breaks above the medium-term Masuda Ashi real body line in a downtrend, or at the bottom of a downtrend, as you can see here. Now, this is a potential indicator that the stock price energy could be turning up, and it warrants due caution, but it is a positive sign. This is also one key point of what we will discuss today. Now that we know all about medium-term Masuda Ashi real body line, when it's blue indicating a downtrend and when it's pink indicating an uptrend, we know the behavior of the short-term line below the medium-term line in a downtrend and above the medium-term line in an uptrend. Now we want to know, using these lines, using this knowledge, how can we identify good entry points, and also, once we're in a trade, how can we identify good exit points? It's not much use having a good entry point when you don't know actually when is the best time to get out of a trade. So we'll be looking at that more closely in this lesson, particularly in terms of gauging entry points. And in lesson 3 of the series on Masuda Ashi chart patterns, we'll be looking more closely at exit points. As we've discussed many times, one of the rudimentary, or one of the most basic aspects of the Masuda Ashi chart system is that pink signifies an uptrend and blue signifies a downtrend. And that doesn't mean necessarily, though, that that any change in any of the lines from a pink to blue indicates a change in the overall trend. As we've just been reviewing, the medium-term line is important here in terms of gauging the trend at a particular point in time. But what we want to look at now is, okay, using this knowledge, how do we know when is a good time to get in? Now, let's focus on the left-hand side here first. We have a downtrend with the medium-term 25-day Masuda Ashi line here, blue, and we have the short-term 3-day Masuda Ashi line, assuming a daily chart, is traversing below the medium-term line. Now, you'll see here, the short-term line here is blue, then it rebounds a little bit, or it rallies in a short pink phase. It's blue again, and pink, blue and pink, blue and pink, until we get to the dead cross that we covered before. So, as we can see, even within an overall downtrend, we do have some points of rallying or rebounding. Now, These are very important in terms of, well, in the case of a short selling, if we are in a downtrend already, we want to be able to sell at the highest point and then buy back at a low point. Now, it's impossible for anyone to be able to forecast when the high point will be or when the low point will be. Nobody knows that, but in this context we have a confirmed downtrend now with the medium-term line turning blue, and the short-term line is going below the medium-term line, so we're quite confident we're in a downtrend right now. So rather than buying somewhere here, for example, usually stock prices undulate, they go up and down. Even in a downtrend you'll have short bursts or short rallies, so it would be great from a short selling standpoint if we could buy at one of these kind of rallies on a downtrend. So here's another one and another. So although as we get down here, we haven't got much farther to go in hindsight, so ideally the best time to get into a short selling position would be after you've confirmed that you're in the beginning of a downward phase, so around these areas. If you could do this, you'd still reap the profit. If you bought back here to close out this short selling position, you would still gain this much in profit. And on the other hand, when we're in an upward trend, when the medium-term Masuda Ashi real body line is pink, we have the short-term line also rising in general, but as we discussed before, short-term share prices tend to fluctuate quite a lot, and you'll find even in an uptrend you'll have these dips, and it's a common phrase is called buying on the dip or buying the dips. So ideally we would like to confirm that we are first of all in an uptrend, and we can do that by checking the color of the 25-day or the medium-term Masuda Ashi line, and also we know that we've already had a golden cross here where the short-term line is broken above the medium-term line, so we're quite confident that we are probably on an upward rising track, and the short-term line being above the medium-term line also confirms this. So if we didn't get in here, it would still be reasonable if we could get in around this time buying on the dip, and here we're still in an overall upward rising trend, so but we're getting closer to the peak, and ideally if we'd got in around one of these earlier levels, or somewhere along the early stages of the upward trend, then when we approach the top, this would be a good time to take profits. Now we'll get into more detail about how will we know that this is going to be a good time to take profits or not in the next lesson. So we've just been discussing from an uptrend point of view, when we want to buy at a lower price and hold on to the stock while it rises and then sell at a higher price. Ideally, we would like to buy at the lowest point, but no one can predict when that will be, and it's also psychologically difficult for some investors or traders to buy a stock that is already rising. So in this context, if we know that the trend is going up and the short-term Masuda Ashi line is also moving up, we know that there will characteristically be, or typically be, dips, so we should look out for this change in an overall uptrend from pink to blue, which will signal a likely dip, then buy somewhere around the dip, and then that is not as low as here, but it's much lower than somewhere up here, and even lower than this peak, so that's not a bad entry point to get in. And conversely, when we were talking about the short selling, in the downtrend we want to buy at the high point of a near-term or a short-term rally or rebound in an overall downtrend. So as much as possible in a short selling situation, you want to sell at the highest possible price, not necessarily the peak, because no one can predict when that will happen, and obviously you want to buy back at a low point as well, or lower than when you sold, so that you can recoup your profits. and when in an uptrend you want to buy at the lowest possible point, not necessarily the bottom or the trough, because no one can predict when that will happen, but buying on a dip is a good alternative, and then selling when taking profits at a higher point than when you bought. A key point also to remember is that with these dips, if the dip turns up again, if it encounters resistance, the short-term line encounters resistance at the medium-term line, that's a good sign, because that should indicate that it will continue rising. Although in some cases you may have a short-term dip that does, you may have a short-term dip on an uptrend that comes in below the medium-term line and then picks up this way. So you just have to be careful. Not always will the short-term line bounce back before the medium-term line here. However, if it goes much deeper and doesn't look like coming back, then you probably know that you're in a situation like this where it's going to come down rather than going back up again. So that's just one point to be careful of. Similarly with the downtrend phase, if the rally breaks above here and then comes back down, that's okay, but if it comes back and then looks like going up further, that's something to be careful of. And we mentioned the golden cross down here, which is good, where the short-term line breaks above the medium-term line, but on the other hand we have a dead cross here where the short-term line breaks below the medium-term line. The dead cross is actually at this point here, and the golden cross is circled here. There is no circle here for the dead cross, but it's the exact opposite of the golden cross. And this is an indication that you could be nearing a top, and this would then be very similar to where we were here at the top of, or the peak of an uptrend and the beginning of a downtrend.